All right, good afternoon, everybody. A wild day. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and a member of FINRA SIPC. All of my trades are placed through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. I got everything I had yesterday, plus some NVIDIA, which, man, was that a hard one. The whole market today, I'm like exhausted from today's trading session. Went out last night probably didn't help. Um, at the end of the day here, S&P's up 0.2%, Qs are flat, IWM's still down 1.25%, real weakness there. And the Dow worth mentioning because I think it went green first. Dow up 0.3% today. Yeah, so we outside the IWM, we got our green close, which is what I was looking for today. And the way we did it was pretty crazy. It was not easy. 390 is the level, though. Keep it simple, stupid, right? 390 is a really important support level that we've been talking about for a while now, and we held it about as perfectly as you could hold it, which is interesting because spies usually don't do that. Like when there's an important level for the spies, they either make you really pay up off of it, or that they'll overshoot it and come back through. So seeing spies hold 390.04 today perfectly, and there was a couple tests of it intraday too, and then give us, kind of the stronger close that we were looking for. Just a crazy, crazy. Just like I said, wild day. We identified this head and shoulders pattern when it broke. We identified that 390 is your technical target area of it. At the same time, 390 is a really important previous level here for the market. Just didn't expect to see it in 4.5 trading sessions. Really strong conviction that we had to have some sort of bounce today. If we had another big down day today, if we closed at lows on a day 5 down like this, it really would be like a statistical anomaly, which, we are in a game of probabilities. And when you're talking about statistics and probabilities in a big enough of a picture, anything that can happen will happen. So, is it impossible for the market to close at 388 today? It certainly could happen, but outside of any real new news event, and there really wasn't any new news events. I know that there's some scares over right now with what's going on with China and Taiwan, and we're seeing those headlines kind of hit, and we're getting a little bit more aggressive each day. But there wasn't any real new news headline. We had a number come out at 8:30. It didn't seem overly significant to me. Then we had PMI come out at 10, which certainly dropped the market a little bit. PMI came in strong. The dollar ripped off of it. TLT tanked a little bit further. But like I'm saying, to not see a bounce today with everything that we're looking at, this degree of downside extension, the short-term sentiment in the green zone there for the last 3-4 days in a row, whatever it is now, into a massive level like that, on day 5, would I felt really confident that a bounce is going to happen. It did happen. The way it happened in the afternoon like that was about as tricky as it could be. I mean, even just looking at the market here, we're in a bear market, right? Spies here. I don't know exactly the percentage from highs at 395 or 390. I would guess 15, 17%, something like that. Qs and IWM are certainly down. I'm pretty sure more than 20% at their current levels. So solidly in bear market territory, I would assume. But in the entire confines of this bear market that we've been in, and the first half of the year being one of the worst first halves in the history of the stock market, I don't think that we really saw any pockets of down 5 days. We saw some down 4s. There's a bunch of those. We had this insane sell-off here in June that was 4 big down days in a row, basically. The fourth one was a little bit more muted, but 3 really big down days in a row. Fourth one was still a down day, a bit more muted, and then we had at least a 1-day bounce, and then that was pretty much low for the years after that. We saw in January and February some heavier pockets of selling, really starting in January. This is the only one here. It depends on how you want to describe January 14th. When January 14th was like a green candle here where we gap down and kind of closed flat. So I don't really know if you would count that as like a down day, and if you do or you don't, it depends on how many down days in a row this is. But if you don't count this as a down day, which I wouldn't, it was a flat close that day. Here we had 1, 2, 3, 4 big down days in a row, and then on day 5, which was a crazy, crazy day, biggest volume of the year. I remember this day. We called this loud perfectly on this day 5. So it was like, in some ways, a similar situation as today, where it was day 5. We were down really big. It was a huge volume day. It was a really wide-ranging candle. And you almost kind of had to, at a certain point today, and I think on that day also, like believe in the statistics. That we could be looking for a bounce. I remember we nailed that low that day. And then it was the same thing in February. 1, 2, 3, 4 big down days in a row. Day 5, this is the day that Russia invaded Ukraine. Remember, this day 5 into this gap down was like probably the most aggressive I've been all year. This was like the ultimate layup, I feel like, almost of the entire year of coming in and buying that open. And we were talking about that in the morning meeting, and I think as a team we came in and bought the heck out of this day. It was day 5, and then there was a massive 2-day bounce off of that low. But same thing, even though we were red on the day, we got down on the day. It was day 5, we still kind of closed green. So there's not really any instances here of maybe in here a little bit. If this was more of a rest day, and these 2 days in here were kind of more sideways price action. We don't, even in like the worst sell-offs that we've seen this year, like that January move, that February move, that June move, it couldn't really ever last in the day 5. You just get like too extended. The market doesn't have to, but almost always has some degree of snapback mechanism. Pat's been talking about a lot recently. Markets really don't go just perfectly straight up or straight down. Even if you go back to COVID, which was the craziest, situation ever. Even there, actually, I'm curious. Let's take a look. You would have your snapbacks, and they'd be very fast and they'd be very violent. What was this? These first 2 days were very muted, but then you had like 4 big down days in a row. Day 5 was a gap down and then a bounce. So you would have some days here where you would kind of rip back to the upside. And that was so crazy with the gaps and the halts and everything else. So I don't know. Today's trading session ended up being really difficult. Pat's morning note was super on point in so many ways today, every aspect of it. But the technical portion of Pat's morning note, and this is basically what I reiterated in the morning meeting today, kind of laid out the different ways, and I don't remember exactly where the language was, but he kind of laid out the different ways in which we can look for the bounce today. Where was it? What to look for? Either the one option, that panic selling off the open that ends with like a low 15 to 30 minutes in. That's a pivot low that can be bought. That's oftentimes turns into like a V bottom where you trade through highs. That's the one instance. Another instance is basically buying right away, like the green candle comes in right away. Shorts are covering. Dip buyers are finally coming into the market. That's like the second scenario here. Or Pat literally wrote out this morning the trickiest version, selling in the first half of the day that faces out midday and rounds up in the afternoon to the close. And that's what happened. And it was, like I'm saying, I almost feel like exhausted even talking about it. That's pretty much what happened here. The opening price action, you could tell the opening price action was wrong because of our leaders. The Russell and the semis have been just so consistently our leaders. And I spoke about that in the morning meeting today too. We've seen this happen so many times this year, where if the NASDAQ is trying to rally or the S&P is trying to rally and the IWM wants nothing to do with it, that S&P and NASDAQ rally usually fail. And the opposite's also true. If the IWM is acting relatively strong, a lot of time it eventually will pull up the other indices as well. So you could see here, the Qs were acting pretty strong. Looked like they were creating a pivot in the beginning of the day, breaking up a little bit, kind of, making highs here, price correcting up a little bit. That was led by that, I guess, Google analyst report or whatever it was that was saying that the ad sales aren't as bad as everybody's expecting. So we had a lot of relative strength in, Google, which is obviously a mega cap stock, right in the beginning of the day, that ripped this thing higher. Amazon was able to be strong very on in the day, and Amazon, again, kind of low key. People almost don't even seem to realize it. They're starting to have like a decent advertising kind of business complex that's starting to come into it. Obviously, you've got Snap off the news from yesterday. Same thing, relatively strong. Facebook, which is even down as much as Facebook is still, like a mega cap company. Basically opening up green, acting very strong. So Netflix, obviously, that was the other one. Even though this one opened down, they just ripped it off the open. And that was kind of all off that kind of Google report that came out. And that was like one of the pockets of relative strength that we, as a team, highlighted looking at off the open. So I know a bunch of us were trading these names off the open. We called out the Netflix spot. And by the way, this still worked. I remember saying it into the radio right after the market opened, and the low came into Netflix and it was on the way up. I said, oh, you could buy Netflix versus Lowe's. And that held all day. I was like, oh, you could buy Google off Lowe's. That didn't hold all day, just with the market weakness that kind of came in. Snap versus Lowe's, Pins versus Lowe's. That one also eventually failed. But all those names, and a lot of them are kind of mega cap names, are going green. And if you're only looking at the NASDAQ here, you could be kind of deceived that things are going okay. But underneath the surface of it, outside of those names, everything was just trading like so bad, and you could really just see it in the IWM. The IWM wasn't having it. Again, back to the cues here. Second 5-minute bar is an inside 5. Third bar here is breaking up. Things are looking good. This bar's at highs, obviously, at one point during it. And the IWM, like, straight down, like, barely an attempt at a feeble bounce. This here couldn't even break highs. And then by the, this was already concerning me, and I was talking about it very quickly off the open. But, like, by the time this 9:45 bar closed, you just knew it wasn't right. You just knew it wasn't right. And then it almost seemed like pretty quickly, unless we could start seeing strength coming into the IWM. And I remember looking and seeing if maybe this 180 will hold. What I was saying to you guys, 180 is not a level. It's a nice round number. It's like I wanted it to be a level. I think I said that like 3 times on the radio today. I really wish this IWM was a level that I could feel confident that this maybe could look for a pivot here and bounce back. Because without this Russell participation, these spies and Qs, they're just not going to be having it. But the level really isn't 180. The level was really down at like 178. So, it's low day today, 178.90. It shouldn't be that much of a surprise. So, just continued to kind of bleed out here, and then there was just nothing going on, and then we kind of based sideways. I do remember one little piece of hope, if you will, that I liked, which was that the IWM here really started to kind of go sideways, and the Qs are still breaking lows. So, all right, at least now the IWM is stabilizing a little bit and kind of holding in a little bit. Maybe that can, still round up into the close. And then, we had this new low break at 12:55, not for the spies. Spies still, basically retested 390 again, made a little bit of a higher low. But the IWM and the Qs took new lows at 2:55. I think Rich N correctly pointed out, hey, but look, no new follow-through on those new lows. Without that new follow-through on those new lows, that was finally when we were able to get our reaction to the opposite side. You kind of had this sideways price action where you had some resistance here in the Qs at like 295. They broke above that. I remember watching this pullback here too. And I was just starting to get a little bit more excited about this market because we had just broken these new lows that didn't get followed through, and that led to some break of intraday resistance. I'm beginning to see what I want to see for us to round up into the close, and then this pullback was like just a little bit bigger and longer than I was comfortable with. I remember really and I said to you guys, I think I typed it in the VTF, I was like, we need this market to pivot again right now. And then, we kind of stabilized here for 15 minutes, which is what made me nervous. And then finally it was the pivot, and we did work our way back up, and obviously ended up closing really well. Spies were able to actually close green. IWM still a little bit of a concern. The IWM participation wasn't great. Really struggling to get back above this, 180.30, 180.40, whatever that kind of intraday resistance was. And that finally started to go a little bit into the close as well. Got a little bit of a buy imbalance into the close. So we got like a decent close. We got the close that we needed. But it was really, like Pat's note said, we were looking for this bounce today. It really would have been, I think, a statistical anomaly not to get it. But of the three different scenarios that Pat laid out in his note that I 100% agree with coming into the Open, that third one, which is the trickiest one, which is weakness in the beginning of the day, followed by basing out, followed by rounding up, is actually the scenario that played out, and it just kind of made for some really tricky, stressful price action. Obviously, these semiconductors were not helping anybody out. Um, Man, this Nvidia got pummeled. 140 was like a really key level that we spoke about in the morning meeting. We closed above 140, 139.85. So we closed like right at it. Yeah, we closed right below this key 140, which is a level that we were paying attention to in the morning meeting for Nvidia. We were paying attention to AMD 80, which overshot but closed decently well as well. These are higher volume hammers in here. I would expect, based on the way the Nvidia volume, Nvidia volume is sick. It's one of the highest days that it's had. I was looking at that earlier. Had a higher day back here in November. Was it even higher? It was higher. What did we do? 115 million that day. What did we do today? I bet we beat it. 117 million today. This is the highest volume Nvidia bar going back to September 2020. So yeah, we got downside kind of, I don't like calling them this, but bottoming tails here for the market today. The IWM for some of those semiconductors. So, it looks to me like we're set for price correction. When you get a hammer like this, especially when there's volume confirmation, which there kind of is here for the IWM, you get a hammer, and especially considering that this is the Thursday before Labor Day weekend, which this is usually like a slow week. But considering, we got a lot of volume today, we got kind of these bottoming tails. So typically what this means is that you've got like probably a better than 50% probability of now getting a price correction back up to the ADMA on your daily charts. And then again, we could easily just make a lower high up there and then work our way back down. The entire point that I've been making here over the course of the last couple of days, today included, is that we can continue to be bearish, we can continue to go down, but there should be pricing and time correcting in a downtrend, not just like 100% straight down. I know fear is a stronger emotion than greed, so it's easier for the market to take the escalator up and the elevator down because they're climbing the wall of worry on the way up, and then the fear selling comes in on the way down, and everyone can rush to the exits at the same time. But you do still need to typically have some kind of backing and filling in the market, some sideways price action in a really bearish scenario, and that could still happen. We could just start going sideways here for the next few days. This is only one more day this week. I'd be curious to see actually what happens tomorrow, because it's a Friday before a holiday week, and we have actually consistently seen, going back to Thanksgiving of last year, in front of these like holiday weekends, weakness. So I'll be curious to see, and we got a big jobs number tomorrow morning too. So tomorrow's going to be another interesting one. But if you want to just talk about the pure technicals in this moment, you're telling us that we're due for further upside price correction, which again could just become a bigger picture setup to be getting back short. We could correct back to 403 in the SPYs, which is still $7 worth of upside from here, and then create an upside shooting star, which becomes a downward pivot that we could utilize for some sort of execution for shorts or for profit taking. Bottom line, I guess we got the bounce. It was just really, really tough, really tricky, and from an execution perspective, it was very hard. You almost kind of like Pat was saying, it's kind of like I was saying before. It's almost even like how Pat was describing when he did the afternoon meeting the other day, how he does that extension downside kind of trade. It's like at a certain point, you kind of almost had to just believe in the levels and believe in the statistics. 390 was the key level that I was looking for. I didn't think that we would actually test it. When I saw that we were gapping down, I was buying I got some great stock pre-market. Pre-market low for the SPYs was 391.81, and this actually kind of really helped and saved my day to a certain degree. But I bought, I got Google, like 155 something pre-market. I had Amazon. I just had some really good pre-market prices that really helped me out. I had Amazon like 125.50 as like an opening price, so I'm booking profit into this up move, and even on this pullback, my price on it isn't too bad. Google, I had a really good early price also. Google, I was buying below 108, about like 107 something pre-market. So I was able to, early bird kind of caught the worm a little bit with some of those. But still, even with that, it helped me a little bit, but it did not make today an easy day by any means. And we had that one good energy trade today off of lows that was called out, this XLE off this hammer. Particularly, I think I called out the Apache trade here back through 37. I think I even called it out before that a little bit. That was a solid trade off those lows. So we managed to have some excellent trades today, considering what this day was. We were focused on the right names at the right times, which is really important. We're able to focus on those kind of advertising related tech names off the open that were acting really strong. We knew when to be able to step back because the IWM wasn't giving us the right signals. Focused on the oil trade at the right time. Timing on that was pretty impeccable. The XBI trade that Josh and I both kind of called out. Josh, I think like right in here said like, I love how this XBI looks. It was showing really good relative strength. I had called it out, I think, off of this candle because remember 10 a.m. is when the manufacturing number came out this morning that tanked the market. And what I was saying to you guys, I almost forgot to even mention this in the recap, that was what also really killed us, right? You had the IWM already being weak, and then the 10 a.m. number came out, and the dollar just freaking ripped off of it, and TLT tanked off of it, and the market kind of tanked off of it. So you had this higher volume negative Maribozu. So I kept saying, like, the only way that this market improves, we have to negate this candle. And it was so hard for the market to do it. Like this 393 to 393, like 20 area, which is basically the high of this candle. It really put us, this is what I was saying in real time, I was like, oh, we're just guilty right now. The small time frame technicals are guilty. They have to prove us innocent. But look at the first thing that I noticed that was able to break the 10 a.m. high was XBI. The market got wrecked at 10 a.m. This just like put in a little bit of a tail that held lows and it was instantly back above it. It was very hard to find anything else that was doing that. And then look at this follow through on this chart. So that was just another one. So again, point of the matter here, I think Josh is summing it up great out of the corner of my eye. Teamwork makes the dream work. I love it. It's totally a team effort because on what is really difficult, tricky price action on a day like today, we were still able to kind of nail the timing on the right, focusing on the right things at the right time. Like I said, whether it was the advertising related stocks off the open, energy stocks when that came in, XBI when it showed that degree of relative strength, it was just super on point. And don't get me wrong, there were other things out there that were tricky. Like I traded CRM today and lost a little bit of money on it. I thought that CRM, we had talked about this big 154 level, I think, in the morning meeting, or 155. So, tried to trigger through that 155 here early. Market wrecked it. 10 a.m. number comes out. So, I think that was like a break-even trade for me or something like that off that first one. And then I tried it again here, I think, off of this low, where I just got stopped out of it. So, wasn't able to keep that. So, definitely not perfect, not 100% success rate, but on a day like today, I really think that the communication and the focus and switching back and forth focus on just different things at different times, it was kind of impressive. So shout out to you guys on that. That's all I got. I am happy to answer any questions that any of you guys have to the best of my ability. So let me scroll up here into the VTF. Yeah, the 393 was so key. So thanks, Robert. Thanks, Steve. Lulu, what's Lulu doing here after hours? Up big? Okay. Tesla price target increase after hours? Is that thing moving up after hours a little bit? Yeah, up $1.50 after hours. First thing I'm seeing here, I think is from Paul. Can we review your DVN trade? For sure. This is the one you said you got shaken out of. DVN gap down. All right, let's start with the daily chart. Let's start with the daily chart. Okay. So, somewhat similar to this XLE complex. So, what I mentioned in the morning meeting about XLE, I really liked it yesterday for that dip buying opportunity, and I was much more nervous about it this morning. I didn't like the degree to which it was gapping down, and I didn't like the degree of upside tails that a lot of those stocks showed yesterday. So what I was talking about with the energy trade today was to be patient. Like yesterday, I really liked the idea of the dip buy. Today, I'm like, let's be patient. They might deteriorate this thing. Let's see what XLE looks like at $78. $78 is kind of a key level, and it did breach that 78 and kind of come back up. And again, I think the call out that we had on XLE and Apache was pretty good. DVN, I wasn't particularly watching myself, but I remember this DVN was one of our kind of big call outs. I think back here on like August 18th for a breakout. I think we're looking at DVN and COP in particular on that day, and they both worked out really, really well. Did great upside follow through. Now it's in a technical pullback deeper into this equilibrium area. Today it even triggered through the 21 EMA and came back, which is fine. It's just a deeper pivot than you would usually technically want, but it's not necessarily bad. And $66 we know is also like a pretty key level, because there's the $66 from August 18th was the breakout level that we had discussed. So with that review of the daily chart there, let's just read the rest of your question. So gap down deeper in the equilibrium on the area. So you wanted a signal to get long. Love the thought process. You bought the 935 candle, which makes plenty of sense to me. Look at that candle. Good volume, extended on the 5-minute chart, giving you a nice deep tail here. I like it. So you bought 67.43. Okay, so you got pretty good pricing on it. I like it. Hammer with a large tail and good volume, 1-to-1 would have been well ahead of the 5-minute ADMA. Would have been, yeah, exactly. So you're saying that you bought 67.43. So your stop loss on that would be 66.80. So you're risking like 63 cents on that. So you more or less need to move to like $68, maybe a little bit above $68 to get your 1-to-1. See the high here is 68.07. Curious to know if you actually were able to get your 1-to-1 on that. But yeah, plenty of room here to the ADMA for sure on a price corrective action type of thing here. You got stopped out when new lows came in at 10.05. Yeah, so I really like your trade. That would be the first thing I would say about it. I really hope you got your 1-to-1 kick. It looks like it was very close. It was very close. Like maybe you got it by a couple of pennies, or maybe you missed it by a couple of pennies. Curious to know. It was just about at that 1-to-1 based on what you tell me the prices versus the stop loss. So I really hope you got it. You missed it. Damn. But it's the right idea. Yeah, and that's unfortunate. It really is. I've obviously been there many times. I don't think it negates the fact that this was a really good trade, and it's just really unfortunate. A trade like this to not get your risk covered, I think very high probability of being able to get at least a big enough move to get the risk covered, considering the volume, the tail, the distance from the ADMA, all the things that you're looking at. So the fact that you missed it by just a couple pennies is really unfortunate. And then the overall market weakness didn't help. The energy weakness didn't help. The USO weakness didn't help. XLE selling off. Obviously, XLE is a layer of probability for your DVN trade. I don't like the XLE tail as much as I like the DVN tail. I'd like it to be a little bit bigger. It's not the end of the world. You can certainly bounce off of that. But then look what the XLE was followed by, inside 5 and down. So a lot of the times when you get a straight failure, and I know that's not exactly what we're looking at here in XLE, but like if you had like a perfect hammer on the XLE, which it's not, one of the ways in which this trade fails, like a hammer trade fails or a shooting star fails, is when it's followed by an inside 5 and down. And I think even in my candlestick class, I talk about when you get that like hammer extension setup, the inside 5, if it comes in after that, is very telling. And this inside 5 is actually something that you can typically execute in either direction. Because if the inside 5 breaks to the upside, it's just further evidence that the price correction is coming in. And then you get your upside price correction to your moving average area. That inside 5 breaks to the downside, it's usually a signal that the tail is going to fail. If the tail fails, you usually get acceleration to the downside. Like, again, assume that this is a little bit of a better hammer than it is, just for learning purposes here for a second. It's followed by this inside 5. So, you know, I'm not showing you guys anything that is, you know, I'm not reinventing the wheel here when I'm talking about candlestick analysis when a hammer candle comes in. Hopefully my, you know, spin on what to look for as far as corrective price action off of it, not thinking that it's a reversal candle, viewing it as a retracement candle, understanding the risk reward based on the low versus where the ADMA is, understanding the volume. That's all the more nuanced stuff that, you know, we look at as a team on a more professional level. But you're not reinventing the wheel when you talk about a hammer buy setup, right? So everyone sees that, and they take it. And then when you get this inside and down, all the people that bought in this candle, they're all screwed now also. So that leads to even significantly more selling. So this is exactly what tends to happen when this type of tail breaks, is you actually get acceleration to the downside. So you didn't have that XLE working out for you, but the DVN trade in and of itself, I really like. Look, it was even trying to be strong, right? XLE gives an inside 5. This is actually breaking to the upside after. So I think it is still buy the ticket, take the ride. You're going back to that little hypothetical example I was talking about, where if you take this in, you know, the next candle that comes in is an inside 5, I probably would just still buy the ticket, take the ride, leave my stop here. At this point, how much are you saving if you wanted to raise your stop to the inside bar low, and that's triggering and you're stopping yourself out earlier? You're probably not really saving too much. You know, in this case, you're saving 17 cents on XLE. I would just keep the original stop in and, you know, stick with the trade. But, you know, the bottom line here is I like your trade. I like the thought process. You know, I do think, and again, if you want to just talk about probabilities, looking purely at this DVN trade, I would think that you would have in excess of a 50% probability of getting a snapback to the ADMA. But that means that there's still a probability that you're not. And this is the probability that where it didn't happen. And again, maybe that XLE was a little bit of a layer of probability against the trade. So I hope that helps. Cool. From Steve here, execution thinking, especially on initial entries, understand it is a complex issue. Any guiding principles are appreciated. And then looks like a follow-up comment. Maybe focus on trades you like to swing. Assume that you need to focus on the daily chart. Sure. So kind of a broad question on execution. Execution is a little bit difficult to tackle in broad strokes because I think that execution is heavily dependent on trade type, and there are many different types of trades, and that the proper execution varies based on the trade type that you're taking. So momentum trades versus counter trend trades, a breakout trade, something that you're building into versus, you know, candlestick type trades, inside bars, you know, hammers, shooting stars, you know, all of that's going to have like nuanced execution based on any individual trade that you're taking. And, you know, I would just, you know, reference, and I'm happy to go over it again in broad strokes here in an afternoon meeting, but I would just reference a couple classes that you can check out where I think I get into the execution of certain types of trades. So my first class, which is the intro to technical analysis class, I believe I get into the execution on how to trade a breakout, how to trade a breakdown, specifically how to enter the position where the stop loss is supposed to be, how to buy off support, how to short off resistance. Then in the candlestick class, I get into the specifics of the execution on buying the hammer that we just basically went over for the XLE situation, the DVN situation, or the opposite of that, which is a shooting star. But I don't have a class on out there on when we have tackled it in a bunch of afternoon meetings, and there should be a class on it. I can't get these T3 Live people to do the things I need them to do, which is very frustrating. Because I know I specifically did an afternoon meeting on it one day, and I asked them to pull the afternoon meeting to just make that the class and get the compliance approvals. But if I don't do things myself, things don't happen. So again, I don't have a specific class up there right now on inside bars, and what I would couple with inside bars would be continuation hammers. And again, so I'm just going over all this because these are all different types of trades that we really focus on here pretty regularly as a team that are going to have a little bit of kind of different execution points to it. I think as a broad stroke, one of the things that I always really like to preach, whether it's a counter trend trade or a with trend trade, is buy it in the direction in which it's moving at that time. So like, if we're always buying in the direction in which it's kind of moving at that time. Never really just like, not too often, just putting out bids and hoping. You'll do that a little bit sometimes on like support trades, but I don't like that type of execution. Like, and I even mentioned it in AMD as AMD was approaching 80. The way you could trade AMD as a support trade, and again, this trade just hasn't been working anymore because markets evolved. So I don't really do it much. I used to do it a ton back when I was like a newer trader, like 10 years ago. It would really work a lot, and now it doesn't. But like the way this would be the one trade where you would just buy it on the way down. Like you go, okay, $80 is support in AMD, it's daily support. So how much am I willing to pay up off $80? And you build out a game plan for yourself. I'm gonna buy some stock at $80.35, some stock at $80.25, some stock at $80.15, some stock at $80.05, and average down versus a stop loss of $80 and build into a position under the assumption that $80 support will hold. The problem is that hasn't worked well in this market environment, so I don't really ever go over that anymore, just because I'm not going to go over things that don't work in the current market environment, right? Those like support resistance levels in the modern day and age, they tend to be much more loose. That's why I was saying I was so surprised because you could have done that with SPYs, but I'm so surprised it worked. You could have just been like, okay, SPY 390. Derrick said that's a level. I'm just going to throw bids out in front of it and buy it on the way down with stop loss at 390. That would have worked. That almost never works. that would have worked today. But so for the most part, with the exception of that, which I don't really like anymore, you want to be buying in the direction in which the stock is moving. And that's whether it's counter trend or with trend. Like if you go back to the DVN example that we just went over, you're not buying DVN on the way down here and just hoping that this tail comes in. You're buying after the tail was formed. So like, you're selling on the first bar. The second bar begins with selling. Right here, buyers come in. And when the bar closes, it's on the way up. So even though, if you look a little bit big picture, it's going down, in the moment in which you are buying it, it's on the way up. That's what I mean by buying it on the way up and not just like catching a flowing knife and having bids out there and hoping. Or even if you're looking at a momentum breakout, which we don't have any of those today because of where the market is, you're buying the breakout of a resistance level. You're buying that on the way up through the level. Shorting is going to be the opposite. Whether it's with trend or counter trends, you're shorting on the way down. Or even if you have an uptrending stock, like a little bit like yesterday in this thing. If you have an uptrending stock and you want to buy these pivot lows, you don't just put bids out on the way down and hope that it's going to pivot. You say to yourself, like, okay, this thing is in an uptrend here. But even in an uptrend on, this bar and this bar, it's going down. When this bar opens, the first half of the bar it's going down. The second half of the bar it's going up. It closes with a tail. So even though it was going down for 2.5 candles, in the moment which you're buying it, it's on the way up and you're getting upside continuation. So again, that's a great broad stroke. Buy in the direction in which the stock is moving. I sometimes don't do that, but I want to be clear, and Pat was talking about it a little bit yesterday. Like when I'm doing that, and we discussed in a recent afternoon meeting the concept of a feeler position. If I'm buying stuff on the way down, I did that in the video a little bit today. Which, as small as I was, the video's down move was so big that even that became a little bit painful at a point. The only time I'll ever just like kind of catch the falling knife a little bit, if you will, is I'm doing it super small as these feelers, where I can give it a lot of room. I usually don't have a stop loss on it. I'm just like giving it breathing room. It's like a placeholder. I'm watching it. I really want to see what this thing can kind of do and how it can turn around. Otherwise you should really just be buying it in the direction in which it's moving. And then again, every specific trade is going to have its specifics of entry and exit execution. And now to kind of go to your follow-up question, which was specifically on like execution towards swing trades, do you need to focus on the daily chart? Yes, but I'm never not focusing on the daily chart, right? So first of all, I don't do a bunch of like pure day trading anymore, unless the trade fails, then I'm out in the same day, like in CRM today, or on more rare occasions, I get myself and if I'm trading a biotech or I'm trading like one of those crazy news stocks that's up 100% on the day or whatever, and I'm taking like a technical little trade on it or whatever, I might say to myself, this is going to be a pure day trade for me no matter what. Or sometimes I might just turn something into a day trade just because I don't want to add the overall portfolio risk when I've already got, I've got 18 long positions on right now as of today's close. So I might just say, hey, I don't need the additional long exposure, so I'm just going to liquidate this position into the close and put the P&L in my pocket. But otherwise, everything I do, I mean, even in pure day trades, everything I do is going to be based on the daily chart. I wouldn't want to be in a day trade that is against what the daily chart is telling me, because that means that day trade is going to have lower probability. So the way that I like to look for swing trades and the way that I talk about it is that your swing trades start as day trades. You like the daily chart, but you should like the daily chart on anything that you take, or you shouldn't take it, because otherwise then you got a massive layer of probability that's against you. You like the daily chart, you get the smaller time frame execution. What that smaller time frame execution is, that's going to be coming off of a 5 or 15-minute chart, again, has a lot of variability to it depending on the type of trade that you're looking at. Am I buying a daily breakout? In which case it's a momentum trade where I'm using that momentum entry through the breakout level with an ignition bar stop loss. Or is it, like in DVN, like what Paul was describing, he likes the daily chart. He's looking for this pivot point in here. So the execution that Paul is looking for is that hammer trade. So his 5-minute execution, he's really trading the daily chart. That's how he started. We started the conversation. Because look, it's pulled back into daily equilibrium. This is where the stock should pivot if it's going to maintain its trend, if it's going to continue to be strong. This is where I want to see the thing pivot. How is a pivot going to be created? How is this pivot going to be created? Through intraday action. Anytime you get a candle that looks like this candle is an example here from August 22nd, at some point there was a low of the day that came in. Maybe that low was not executable, or maybe it was. A lot of times it is. And when it is, it could be the exact trade that Paul was looking for today, which is that downside extension hammer on higher volume. And then he's simply taking this candlestick trade here, which we should all know how to do. You're basically buying, kind of when the bar closes. Sometimes you cheat on the close, but really you should wait for the close. The bar closes. I just described it, right? You're buying it on the way up at this point, looking for further upside on it. You get your risk covered. Unfortunately, Paul missed his risk covering by a little bit. You recognize that on this time frame it is counter trend. So again, you want to build out your game plan based on, okay, it's counter trend on this time frame, but it's with trend on the big time frame. So with this thing, I would still recognize that it's counter trend on a small time frame. So I wouldn't be as greedy as like a pure upside momentum breakout trade, but I wouldn't be as conservative in my game plan for reward taking as I would be if it wasn't a great daily spot that has daily uptrend, daily strength. I would have a somewhere in the middle kind of game plan. Or maybe my risk on this also would be heavier, a higher rated trade on this particular hammer because of that daily chart location versus if the daily chart wasn't giving me that good location. I would take less risk on this trade. So you still want to get your risk covered. You still probably want to take some more off into the 80 EMA. Maybe you want to take some more from the 21 EMA. But by the time, if this thing's breaking highs, once that happens, then you want to go into like with trend greed mode on it. And then the whole point of it, and the whole point of most of our trades, is going to be smaller time frame risk for daily chart reward. So he loves the daily chart spot. He takes this here. If it works out textbook, which obviously it didn't, the trade failed for him. He took a loss on a good trade, which happens. This thing closes, if it works out, the ideal situation, right? You take some off, gets the risk covered, takes a little bit more off from the ADMA. Maybe it gives a quick higher low. Next thing you know, it's breaking opening highs. Things looking fantastic at this point. Stock closes at $70 today. That's your more ideal situation. Then on your daily candle is going to be, and it even is a hammer here, but like you got this great hammer, $70 close. You've got to swing that. That's where the swing. So the swing execution still comes from the small time frame, and that's when you hear me talk all the time about we want to find small time frame risk for daily chart reward. That's where phenomenal risk reward is going to come into play. People love to talk about like what risk reward are you looking for? Like I like to make 3-to-1, I like to make 5-to-1, I like to make 10-to-1. Tell you what I like to make. I like to make unlimited to one. And I know that sounds like very pie in the sky, but it happens. And that's what I ended up talking about. And we talked about it in the afternoon meeting a little bit yesterday about how I personally, I'm continuing to improve and work as a trader, and I'm much better at holding the big moves to the long side than I am holding the big moves to the short side. But that's how just to use myself as an example, I gave back a bit of profit here, obviously, but I still have some Apple from this day. But we called out this day down here. I think it was this day, July 1st. That was the day that Goldman downgraded Apple. And it was that marked the bottom, basically. And we talked about it that day. Like the clowns are coming in and downgrading Apple. The bottom must be here. And, gave this entire move. But this is most likely coming from intraday risk, intraday execution. And then closes well and go, oh, look at this, I'll swing it. And the next thing you know, it's like, oh, wow, this is great. This is up at 147. And the next thing you know, you're like, wow, I didn't expect this to be at 175. And then, I was lightening up and trimming and trailing, for the most part on the whole way up on this. I basically took off a little bit of stock of almost every single dollar on the whole way up, and then had very little left. My plan was I was going to be all out of Apple to touch 180. And the move was just too big at that point, and I was going to get out and reassess. Didn't quite get there. Probably was 176.15. But I think that's the best possible answer to your question, Steve, and I hope it helps. Steve here. Now I can follow up and study plan based upon trade type and also the things you noted. Very helpful. Great example on Apple too. Hope you got a big bite on the first. Yep, for sure. Scrolling back up here from Jerry. Is your game plan to get heavier if these pre-market buys go against you? Yeah, so the game plan when I'm taking pre-market buys is always to get heavier. Whether it's for me or against me when a setup comes in. I did a bunch of broad-based buying pre-market. I was so surprised. I got out of bed and 6 o'clock or whatever, and first thing I do with one eye open is like coffee's brewing, and I'm like on my phone. I'm just like, all right, where are the futures? I saw futures were down. So Nasdaq. I remember specifically seeing Nasdaq futures down over 1%, and I was like, oh my god, I gotta log in the computer ASAP. And I was like, I just knew from where we closed and yesterday's afternoon meeting, I need to buy a gap down today if it's sizable. And I'm like, oh wow, these Nasdaq futures are down over a percentage point. I need to log in and start doing some buying. So, but the problem is, that early, I want to, like I said in the morning meeting and in the VTF early on today, sometimes on these gap downs that, like, again, like I was describing today, would almost have been like a statistical anomaly if we closed at lows. A lot of times they don't even really give you the chance to get the buy intraday. We're down a percentage plus pre-market. The market opens up flat. People are frustrated because they couldn't get that stock where it was down there pre-market, and then we kind of rip higher, and that was the move, and they made it super difficult to get stock. If that happens, so just based on experience, I'm like, all right, day 5 down. I know it's day 5 down. We're gapping down. I need to do a little buying across the board. So again, Apple, Amazon, Google, Labu, Snap, Pins, CDEV, Path, I think. It kind of just, I think that was it. Kind of bought a little bit of that across the board, but you can't get too heavy pre-market either because of the liquidity concerns. So you still want to have a plan to be able to get heavier when the market actually opens, and there's going to be liquidity, and there's going to be, those pre-market buys are going to be more of those like feelers that don't have the stop loss, to be honest. Like I was talking about before, about when you are kind of buying on the way down a little bit, that you can't be too heavy. It's a similar situation here. You're kind of buying this gap down. You don't really have a hard stop loss yet. You can't take it too heavy because there's no liquidity, and you got to, you can't have stop loss and you can't have real size. And for some people, if you're dealing with a smaller account, you can't even really take these feeler type positions at all, just because it could be too dangerous for you if the market deteriorates pre-market like that. So you probably shouldn't do it. But for me, when I'm doing that, the game plan is certainly I want to get heavier when I get a signal and the market actually opens. And that could be it could be against me, or it could be with me. It's whenever the signal actually comes in. Yeah, but also honestly, like I was saying, almost everything I bought, I think actually everything I bought pre-market, it opened above where I bought it pre-market. All those names, I'm pretty sure. Shop 2, right? Shop might have been the only one that didn't. No, yeah, shop. Everything I bought pre-market when the market opened, it actually still opened above, and that, like I was saying before, that actually kind of helped save my butt a little bit. When the market was making lows and was deteriorating, because we had that kind of round bottom today. From Ahmed, we buy after the close of the hammer. That's the right way to do it. It's the way I teach it. Sometimes you can cheat a little bit if you feel that there's a very high probability that the candle will close as a hammer, and there's 30 seconds left before the candle closes, something like that. Then you can cheat a little bit and buy right before the close. But generally, you want to buy the close of the candle with the stop loss at the low. Andrew S. Managing risk off 1-to-1. I added to a position before my risk off point. Be curious to know why. Should I recalculate my risk off based on my average entry price, or calculate it separately for each order? So I do both of those depending on the situation, to be honest with you. Sometimes I do it entirely based on average price, and sometimes I do it like in Intel yesterday. In Intel, I called out. I said, I'm doubling down on my position. There, I did it the second way that you're describing, where I did it separately for each entry. So I got my 1-to-1 on my double down, and never got my 1-to-1 on my original. So I ended up losing a little bit of money on it, but it wasn't that bad. So it kind of depends on the situation for me. It kind of depends on the reason why I took the ad. If my game plan already had multiple entries built into it, and the second entry filled me, typically in that situation, I'm going based on average price. If my game plan was more like that Intel, where I got in, Rock called it out, I thought it was a great trade, I got in some stock, it was going against me, my pricing wasn't fantastic on it, so I said, it wasn't terrible either, but I was like, all right, I'm going to double down here for 10 cents risk on the double down. That one I kind of did separate. A simple mistaken order entry where you didn't put on enough. Yeah, then you're probably going to use the average price on that, and then try not to make the mistake again in the future. Cool. All right. So looks like we got through the questions. Hell of a day today. I am exhausted. Get some rest. I'm gonna get some rest, and I will see everybody tomorrow. And tomorrow's gonna be another big day. So we go into this 3-day weekend. We got the jobs number in the morning. Can we get further follow through from our good close today? We shall see. Have a great night, everybody.